Okay, so I'm gonna make a wild assumption here and assume that you've raised millions by now, an A, a B, and maybe even a Series C. And with each round, obviously, you've received a fresh wave of capital, new investors, and that initial momentum was exhilarating, I guess, right? You expected exponential growth, kind of just keep things pushing, to keep your business kind of pushing to new heights, obviously, but things are different now. Growth kind of slowed down, customer acquisition costs keep climbing up, and maybe those big wins you once kind of expected seem hard to come by. And I say this because it's a familiar story so many founders resonate with. I mean, with every new funding round, it feels like the stakes only get higher. Okay, investor expectations grow. They look for that big exit, and obviously they'll wait to see returns on their investment, if that makes sense. And sometimes they're nudging you in directions you might not have envisioned for the company. And you know what? Let's be real. With each round, you're giving away more of your company. Really, more dilution. I mean, more voices in the room, more opinions on the board. And slowly it can feel like you're losing control of the business you started. And the vision that once felt so clear, I mean, it's buried now under a pile of investor demands. And sometimes there's that deep lingering fear of like, am I still in control? I mean, is this company slipping away from me piece by piece? Because obviously each funding round is meant to help you grow, but it does come with a trade-off. Because you're just not raising capital, you're losing a bit of control every single time. Okay? And I get it. Maybe that 1% that's left for you, the 5% could turn into $1 billion. But what if I told you though, there's a way to really raise substantial amounts of money, cap, without really sacrificing more of your ownership? A path that could really fund your next stage of growth without inviting more voices into the boardroom. A solution that really just unlocks opportunities and strengthens your brand. Okay? While still holding the vision you started with. And it's the path that some of the biggest names in the industry have taken. Well, and not because it's easy, but because it's powerful. And it's not just for tech giants, by the way, or corporations. It's a strategy that could be the exact next step for your business needs. Okay? And by now, I'm assuming you probably figured it out, but I'm talking about going public. And hold on, I know. The idea of an IPO can seem intimidating, but let's dig a little deeper, okay? Because for companies at your stage, an IPO can really be the ultimate game changer. Okay, so in the next few minutes, I'll walk you through why an IPO could be the most strategic move to basically scale your company, keep control intact, and finally achieve the growth you've been envisioning without the endless cycles of raising rounds, paying people fees to raise the money, and so on and so forth, if that makes sense. Now, so I want to go over basically 3 key reasons why going public could be the solution you've been waiting for, if that makes sense. Number one is really going to be, so let me put it this way. The first big benefit of going public is really the access to a much larger pool of capital. Okay? Because when you're raising funds privately, you're often limited to like a select group of venture capitalists, maybe angels, or maybe institutional investors. Sure, they bring money in. I get it. But it's capped. And it comes with trade-offs. But with an IPO, you're opening the doors to public investment. And I'll get into, because I know some people might be like, okay, there's a lot of demands, a lot of transparency. I'll get into all that, so bear with me. I mean, the IPO, it gives you access to capital that's on a whole different level and gives you the resources basically to grow without constraint, okay? Without the constant grind of also raising funds, once again. I mean, you know what? Take Amazon, for example. When they went public in, I think it was about 1997, they didn't just raise a one-time pot of money. Okay, they tapped into a steady stream of public capital that allowed them to expand aggressively. I mean, Amazon reinvested that capital basically into building massive infrastructure and developing obviously new divisions through the R&D, like Amazon Web Services, for example, which is now Amazon Web Services (AWS) is now literally one, if not their biggest major source of revenue. So going public gave Amazon the capital, flexibility, okay, and growth to not just survive, but then innovate and dominate. And that's the kind of growth and potential you get when you break into public markets, if that makes sense. Now, the second major advantage of an IPO is really the credibility and visibility it brings. When you're publicly traded, it changed the way the market sees you. I mean, suddenly you're just not another private company, another private business. You're a public brand now, which helps basically build trust fast among customers, partners, and employees. So it's like a stamp of like legitimacy that can take years to build otherwise. I mean, not likewise. It typically will take you years to build that kind of brand up. I mean, a good example of that is basically Tesla. So Tesla, if I'm not mistaken, they went public around 2010, and they were still relatively a niche player in the EV space. And around that time, EV really wasn't mainstream. But the IPO transformed Tesla's image, literally elevating it from a niche innovator to a credible source and force in the industry. Okay, that credibility obviously allowed Tesla to attract top engineering talent. As you know, if you have any kind of business, culture, talent, we all know that is probably, obviously, besides the market you're targeting, the people you're on the journey with, the talent, obviously, the culture dictates how far you can go. We all know that. Okay, so the IPO obviously gave them the credibility to attract top engineers. Um, they secured a lot of value partnerships, and they gained the trust of customers worldwide. So being public, you know, didn't just help them raise capital; it transformed the brand's entire reputation. So positioned Tesla as a leader in the EV space. Okay, and I believe an IPO can really give your business that kind of edge, attracting that talent, partnerships you would have never probably came across, okay, or probably never thought could come across your desk, if that makes sense. Now let's go over, I guess, the final one, just so I can get off your ears. So the final, okay, and one of the most valuable aspects of going public really is the chance to maintain control over your company's direction, okay, and unlike private funding rounds where each new investor often expects a say in how the company operates, an IPO allows you to raise capital without sacrificing your vision. Yes, they're shareholders, but the level of control you as a founder can retain is often greater than with private funding. I mean, and the best example of this that you didn't realize is Zuckerberg. Okay, so when Mark decided to take Facebook public, he didn't just gain capital or the brand name. Okay, his deal basically, if I'm not mistaken, it included a dual class. Included a dual class. Okay, dual class share structure, and basically that allowed him to raise billions while still holding decision making power basically over the company. So that setup basically let him pursue his long term vision without the interference, that typically comes from going public. Because a lot of times, besides the transparency, obviously, and the constantly reporting, that's one of the key reasons why some people are kind of really afraid to kind of go public. Now, with that being said, behind me, obviously, if you've gotten to this point, is our company, Robinhood Consultations, and basically, we are a marketplace for all your financial needs when it comes to going public, raising capital, recapitalization, innovative ideas for growing your company. Basically, we're the marketplace that helps you connect with advisors, strategic partners, high net worth individuals, whatever it is, you name it. We basically help you bridge whatever gap you're facing within your business to get to whatever goal you want on your specific terms. So if you're looking or thinking about going public, trying to see how this strategy can be implemented within your business at your current position that you're in, I implore you to go ahead and schedule a call with one of our consultants below. This is not a sales call. It's just really to understand what your needs are, where you're at, and maybe an IPO might not even be a good fit for you. Maybe the traditional route might be a better route for you. Maybe raising money but without giving equity is another route for you. And our goal for that on that call, just to really understand where you're at, what you want to do, and then let you know if that makes sense, if what you're advocating for, what you're trying to basically pursue makes sense. Because obviously the market is vast. We have advisors from people down at Deutsche Bank, people down at Riyadh Bank. I mean, we have advisors who manage at a minimum about $30+ billion in assets, to IPOs, SPACs. About the most recent SPAC was about $60 million. So we have a wide range of individuals who've been in business, advising, help people raise capital, sell their businesses, go public, and so many other things for the past decade and the past century, actually. Okay? So with that being said, this is Robin, and peace.